Hello and good morning, everyone. Welcome to another episode of Just a sec. Sorry for that. So, good morning, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So, today we'll be talking about the top market events that are currently moving major asset classes. So we'll be focusing on the current rallies in major pairs, in indices, with a key focus on the new all-time high that was hit by the Nasdaq this morning and yesterday. And also we'll be looking at the oncoming US GDP data and how it might impact prices later in the day. So as always, this session does not constitute any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. Of course, as we progress, I know this is a heightened heavy moment for Kenya, so we pray and support for all Kenyans that were impacted yesterday. So, good morning, Robert Kavale. Shout out for being the first to join and comment, and see Maureen in the house, Karaoke Davis in the house. So let's get things going. So starting with the economic calendar, you can see that there is quite a number of things that have already happened over the week. We covered most of them. This is majorly from S&P Global Flash Manufacturing and Services PMIs that happened on Monday, with the key highlight on the US economy, where manufacturing was up and Flash Services PMI was slightly down, but still better than expected. Then we went to Canadian CPI, and trimmed CPI came in as expected at 3.0%, down from 3.1%. Then we had the testimonies from Fed Chair Jerome Powell, and of course, a speech from Bank of England Governor Bailey. Then CPI in Australia coming in lower than expected at 2.1%. And now we get into Thursday. So today we haven't had much of major news in early morning. So the main event for the day will be the US final GDP quarter over quarter. So remember that the US GDP data comes in three forms. So we have the advanced GDP that is usually the first estimate. Then we have the preliminary and now the final GDP. So both reflect, the three of them reflect the same data. It's only that it's fine-tuned until they have the final report, which will be coming out later today at 3:30 p.m. So in this case, we will be expecting that the US GDP is the same as advance at 0.2% negative. And the main reason this has been happening is as a result of the second advance estimate, it really went down. Investment in the US economy from the advance to the actual to the second advance estimate, we can see an upwards movement. So government spending slightly improved. There was a big drop, but then this reduced a bit. Exports were really slow, but they improved a bit. But then imports had the biggest impact in the GDP. So when we talk about imports, we know that any country that has been exporting to the US has been faced with tariffs, and this ranges from 10% from a majority of the countries around the world, with major US trading partners getting much bigger tariff than expected. And this ranges from Canada, Mexico, China, and many other countries. So it was the impact of imports that caused all this. So with imports really dropping as a result of the tariffs, then these dropped the US GDP by negative 0.2% in the first quarter of this year. So if you look at the quarter-to-quarter change in prices in the US economy, in Q1 2025, we can see a continued rise in PCE price index, or personal consumption expenditures index. So GDP price index was also on the upwards trajectory in Q1. And of course, the PCE excluding food and energy, or what we call core PCE, was also equally on the rise, meaning that there is an expectation that we could be seeing more inflation in the US economy over the near term. So with that in mind, if there is a big change in the final GDP, that could cause a lot of impact in the markets. But of course, with already two estimates in the books, then good chances are likely that we will see the same exact number of negative 0.2%. So outside of that, we'll be looking at unemployment claims. These are weekly data point that tracks the number of people filing for unemployment insurance in the US economy. So in the prior reading, we had 245K, and we don't expect much of a change, around 244K. So a difference of about 1,000. So core durable goods orders data will also be out in the GDP report. So we're expecting a 0.1% increase, a slowdown from 0.2% in the prior reading. So durable goods orders are expected to have jumped higher by 8.6% month over month. And this is from a negative drop of negative 6.3%. So clearly, a big jump in durable goods orders would be a big upvote for the US economy, and will likely be taken positively in the markets. So final GDP price index still at 3.7%. So those are the key data items that we'll be focusing on this afternoon. And other than that, we'll be having a couple of speeches from Fed members. So Fed member Bakin, Daly, Hamak, and of course, we'll be looking at Barr, all speaking in the same day. So of course, we'll be looking at a lot more sentiment from Fed members. So then tomorrow, we'll wake up to Tokyo core CPI, which is expected at 3.3%. And then we'll look at the Canadian GDP month over month. We expect no change in the prior month. And then the main highlight for the week will be the core PCE price index, which is a measure of US inflation. It's Fed's favorite measure of inflation. And in this case, we're expecting an increase of 0.1%, same as the prior month. So with that in mind, we'll also be looking at other key highlights in the markets. So from financial juice, I don't think there is any major highlights. So it's more of interview updates from US Envoy Wyckoff, and this is mainly concerning the Israel-Iran war and the key developments. So other than that, I don't think there's any major key highlights. Of course, there is a threat by Russia to new output hike if OPEC decides that it's needed. So in this case, we know that OPEC Plus, or oil producing and exporting countries, when they added the plus, they included Russia and other countries. So Russia is a major oil producer. So if Russia gangs up with OPEC to increase oil output, then this is likely to drive oil prices lower. And of course, we know that oil price has dropped by over 15% since Monday's high. And this is as a result of the de-escalation of the Israel-Iran war that had added a premium on oil prices. So naturally, oil prices were headed lower, with OPEC increasing output and driving prices lower. So on other news, looking at the FinV's track of currencies and how they have performed since the market opened, the dollar has been the weakest currency. Of course, it has hit a 3-year low. And then other currencies have gained on the back of a weak dollar, with the Japanese yen gaining by 0.92% since the market opened today. The UK pound is also up 0.66, the euro 0.6, the Swiss franc 0.5, New Zealand dollar 0.49%, Australian dollar 0.45%, with the Canadian dollar being the weakest gainer at 0.24%. So of course, we know that the Swiss franc has had quite a run, having hit 13-year low for USD CHF. Then we might expect even more activity in the pair later in the day. So on other market updates, US 10-year yield falls as dovish Fed on dovish Fed bets. So the yield on the 10-year US Treasury note declined to around 4.27% on Thursday, its lowest level in 7 weeks, as expectations for Federal Reserve rate cuts gained traction. Fed Chair Jerome Powell, in his second day of congressional testimony, reaffirmed that interest rates should remain steady amid concerns that tariffs imposed by Trump administration could drive inflation higher. However, he acknowledged that absent those tariff pressures, the Fed would likely have continued easing policy. Markets are now pricing in more than 60 basis points of rate cuts by year end, with the next move anticipated in September. Attention is also turning to trade negotiations ahead of Trump's July 9 deadline, as well as efforts in Congress to finalize a tax and spending package due around the same time. On the geopolitical front, US officials expected to meet Iranian counterparts next week, and the ceasefire between Iran and Israel appeared to be holding for now. So, on other updates, the US dollar index fell to around 97.5 on Thursday. I believe it has fallen even lower. So, I'll just make a quick check on the dollar index. So, right now it's at 96.681. So this is the lowest level in more than 3 years, as easing geopolitical tensions, expectations of Federal Reserve rate cuts, and rising fiscal concerns weighed on the currency. US officials plan to meet with their Iranian counterparts next week in a bid to curb Tehran's nuclear ambitions, while the ceasefire between Iran and Israel appears to be holding. So on the policy front, Fed Chair Jerome Powell reiterated on Wednesday that rates should remain steady for now, citing risks that the Trump administration's tariffs could drive inflation higher. However, he acknowledged that absent of those tariffs, the Fed would likely have continued cutting rates. Traders are now pricing in an over 60 basis points of rate cuts by the end of the year, with the next move expected in September. So, looking at other news, of course, we have updates on July 9. July 9 is when the 90-day freeze on tariffs is set to expire. So pressure to seal Trump trade deals by July 9 ramps up. So 2 weeks from President Donald Trump's self-imposed deadline to reach deals with the U.S. major trading partners, some of the most watched talks aimed at clinching agreements to avoid higher tariffs are struggling to get over the finish line. There is a lot of stake. As of July 9, exporting nations without a bilateral accord in place will face Trump's so-called Liberation Day tariffs that are much higher than the current baseline of 10% level applied to most countries. So only the UK has secured something on paper, though that pact kept the 10% so-called reciprocal rate in place and left unresolved one of Britain's main points, which is a 25% tariff on steel. So on a separate track in China, which has a fragile truce with the US that extends into mid-August to give time for negotiations to play out. Countries engaged in the Washington views as productive discussions may get their deadline extended. Court challenges to Trump's legal authority for tariffs have provided an added element of uncertainty for companies that have spent the past 10 weeks either front-loading orders or hoping his threats of higher import taxes are just a negotiating tactic. So, of course, there is a rundown on each country and how it might be affected, and I'll be sharing the link with you guys so that you can go through it later in your own time. So I've just dropped the link in the comment section. So other than that, on the stock market side, there's been quite a number of surprises, with Micron Technology reporting better than expected earnings. So they reported that quarter results that topped Wall Street estimates on both the top and bottom lines. Adjusted earnings of $1.91 per share topped the Bloomberg consensus estimate of 1.6. Adjusted revenue was $9.3 billion compared to an estimate of $8.85 billion. The company's fourth quarter outlook for both profit and revenue were also better than expected, meaning that they revised their fourth quarter expectations higher. So in this case, we should be expecting to see some more volatility on Micron shares at market open. Another company that surprised the markets yesterday was H&M, which reported quarter two profit, which beat expectations despite cautious consumers. So Swedish fashion retailer H&M reported a slightly stronger second quarter profit on Thursday, an encouraging sign as CEO Daniel Ever tries to reboot the brand and improve profitability. H&M shares were up 4% at the open as investors focused on the profit rather than the second quarter sales, which fell slightly more than expected. Ava said his focus is on profitability rather than solely sales growth. So that is also expected to have some good volatility at market open later. Then we move on to another update, in this case from Yahoo Finance. Stock market today, Dow, SP 500, Nasdaq futures edge up as Trump looks forward to Powell's replacement. So yes, in this case, we had the SP 500 rising 0.2% in early morning trading. So Nasdaq 0.4%. So this was a good performance at market open. So clearly, we are seeing even much higher performance. So in the last 5 days, you can notice that we have had a 2.6% increase on the minimum for major US equity indices. So I'm trying to extend the chart. So just give me a sec. So we are looking at the 5-day performance. Sorry, the chart is not loading all of them at the same time. But clearly, you can see that the Nasdaq is up over 4% in the last 1 week. The SP 500 over 3% and the Dow Jones 2.6%. So Trump said earlier on Wednesday he's actively considering replacements for Powell, adding, "I know within 3 or 4 people who I'm going to pick." Powell wrapped up 2 days of testifying before the House and the Senate, where he stressed to lawmakers the central bank is well positioned to wait and see how Trump's tariffs are impacting the economy before reducing rates. So stocks were bought on Wednesday, with the SP 500 finishing just below a record high. Investors' jubilation from the day before, sparked by an end to hostilities between Israel and Iran, moderated even as Trump declared the conflict over Nvidia stock, meanwhile leaped to a record high. So the main event for Wall Street to end the week lands Friday, with the expect of the Fed's preferred inflation gauge, the personal consumption expenditures report. Investors will be watching closely for any signs that Trump's tariffs pushed prices higher. So that will be a key watch tomorrow. So other than that, if you look at how currencies have performed, one notable currency pair that has been making waves is USD CHF, which has been on a 5-day streak of dropping. And if you look at the current price, the last time we saw this price was all the way back in the year 2011 on Thursday, 1st September. So this is a 13-year low, and it seems to be extending. So that might be a currency pair you might want to check out. And also, if you look at the dollar index, it's also making a big drop. So if you count the number of red days, I would say this is the sixth straight day that the dollar index is losing, having hit 97.106. And the last time we saw the dollar index trading this low was in March 2022. So we are looking at more than a 3 years low. So with that in mind, I believe we can jump straight into some technical analysis and try to understand where the prices might be headed next. Of course, if you have any questions or comments, feel free to drop them in the comment section, and I'll be responding as we progress. So I can see more people have joined. Morning Maureen, Karaoke Davis, I can see Sean in the house, Samuel Njoroge, Andrew, Mike, Max23, J Squad, I see you. A good question on my medium-term projection on gold and GBP JPY. You're saying my chart is not reflective. I don't know what you mean. Can you clarify? Also, as we progress, remember that if you're just beginning your trading journey, you can find this course on YouTube. Just search Novice to Pro. This should be on the FX Pesa channel, where you get this full course right from introduction to trading, what is Forex, and go through with it until you learn how to trade like a pro. So we make sure to practice the lesson you learn after each episode. So also on the Bullish Banter side, which is our official podcast for market content, trading strategies, and market psychology, here we have a new episode that came in about 10 days ago, where we talked about AI, whether it will crash the market, and of course, many other topics around that. So that being said, let's do some technical analysis, try to identify potential opportunities. So this is the US dollar index. It's still dumping since the market opened, so still pushing lower. And with that in mind, we know that when the dollar is weak, other currencies are strong. So starting with the USD trading against the Swiss franc, all we have seen since the market opened is a big sell-off with the candlesticks that are getting sequentially bigger and bigger. So this might be the trade for the day, looking to take advantage of the strong bearish momentum. So more short momentum is expected. So of course, if you look at Euro USD, it has hit a level that we last saw all the way back in 2021 September, and it's also making some very strong bullish momentum. So since the market opened, all we have been seeing is a strong bullish momentum, and it seems to be extending even higher. So I don't know for how much further we are going to see the bullish momentum. So you don't have to necessarily FOMO in, but then if there's a pullback, then it would provide a nice entry point. So pound USD also making a run for it with a strong bullish momentum as we enter the London session. So still all of them riding on the back of a weak dollar. So if you look at the AUD USD, also doing the same thing, strong bullish momentum. So since the market opened, all we have been seeing is the Australian dollar gaining against the US dollar. So while the others, the pound USD, Euro USD, and USD CHF don't have candlesticks on the left, AUD USD has candlesticks on the left, and the last time we saw this was in June 16th. So the June 16th high might be the new target for the day. So we are looking at the bullish momentum potentially extending to 0.65522. So USD JPY also has candlesticks on the left. So after trading in this triangle for a while, we managed to break out of it last week, and this week we pumped to a high of 148.005, and now the market has gone all the way back down, and now we are looking at a potential extension of the bearish momentum to around 143.6 to 143.44. So good chance that we see the USD JPY extending this bearish momentum as we look to test this lower trend line that has been holding true since April this year. So oil is in some form of consolidation, moving up and down, but not breaking out. So from the 1 hour time frame, this is how it looks like. From the 15 minutes time frame, this is how it looks like. And if I zoom out, you'll notice this kind of consolidation. Of course, you'll be expecting to see some form of break. We are much closer to the break. So this area here will likely present us with an opportunity. If the break is to the lower side, we short. If it's to the upper side, we go long. But then it seems like the break is imminent. So it's the one chart to be watching for a potential trade opportunity for the day. So gold has been consolidating since Tuesday. So Wednesday, we maintained this form of consolidation in what is looking like a rising wedge. But then in the last couple of minutes, we have seen a breakout towards the upper side, which implies that gold could be recovering from the earlier sell-off that we saw in the last 2 weeks. So good chance that we see gold recovering from here. So having hit a key level support area on the forward chart, you can see it was a key level multi-week low. And now with the market bouncing from there, good chance that we see a continuation of the bullish momentum. And of course, in this case, looking at a potential rally, we could be seeing gold setting sights on Tuesday's London session high. So 33.57 is a level that we hit in the Asian session after having a big drop in Sydney. In Tokyo, we hit this area here before seeing a further drop. So in this case, a potential extension of the momentum higher to around 33.57. So the Nasdaq hit a new all-time high. This was yesterday, and Now we are seeing the Nasdaq attempting to push even higher. Of course, with a new all-time high, we don't have candlesticks on the left, so there's nothing to compare to if you're looking at for the next stage or the next stop for the market. So good chance that we see an extended momentum on the Nasdaq for the day. So SP 500 is really close into getting into a new all-time high. So I'll try and identify the high, like right now. Let's find it. So this is the highest price ever on the Nasdaq, and now we are looking at a market that is looking to retest that area. So from the 1 hour time frame, if you zoom out and then you compress the chart a bit, then 61.49 is the price action area that we should be looking to target here for the SP 500. That's the new all-time high. So also for the US 30 or the Dow Jones, it really struggled breaking above this. But then now with a very strong bullish momentum, there's a good chance that we break above this and run for the new high. So that hasn't happened yet. It has really struggled to break above this area here. So this has been the key hindrance. But then now that it's setting up and we could be seeing some momentum higher, then good chances we experience a bullish day. So Bitcoin had a big dip that got all the way down to $98,000 per Bitcoin. Then after that, we had a very strong bounce and the bullish momentum keeps continuing. And of course, we should be looking at last week's high. So last week's high was at 108,924. So good chance that we see the rally extending to that area. So on New Zealand USD side, strong bullish momentum. Of course, there is an obvious target as of the previous high, so 0.60794. So this basically extending to this area here before we make the next decision. Looking at silver prices, they were largely on this side with this break failing. And now we are breaking again towards the upper side. So good chance that we see silver recovering and pushing even higher. So with the current price action area, it seems like it's likely that silver pushes to around that 6.635. So European equity indices are all bouncing in positively with the German stock market index looking to continue the bullish momentum for the week. The Spanish stock market index, after falling strongly, and this was yesterday, we are seeing the market now reversing and moving higher. So perhaps retesting the mean and getting back to the previous high might be a play as we approach the end of the week. The France 40 stock market index had a gap and it tried to close the gap on Tuesday, then on Wednesday completed the journey. But now with a very strong bullish momentum, there's a good chance that we could be seeing buyers coming back, but we don't have evidence of that yet. So we wait until we see evidence of buyers coming back in. So for the Swiss stock market index, it's also the same thing, a big gap. Then Tuesday, Wednesday, we close the gap. And now it seems like the market is looking to accelerate higher again. So now we start looking at Tuesday's high and start looking at the potential of the market getting back here. So Netherlands stock market index, also the same thing. Big gap, we closed the gap, and now it seems like we are bouncing. And for the Norway stock market index, even from the daily, we know that we had hit a new all-time high earlier in the week. Market dropped sharply, and now we can see that attempts to close the gap failed on Tuesday. On Wednesday, failed even further, but at some point, we expect to see the market going for the closure of this gap. So in this case, a potential momentum higher. We don't have evidence of buyers getting back in, but at some point, we should be expecting to see that. So on the Asian side, there seems to be quite a slowdown. So sorry, this is EU 50 cash index. So clearly a very strong bounce here. On Monday, Tuesday, Wednesday, we raised some of the gains, but it seems like we are holding here for now on Thursday, and we should be watching out to see if there is evidence of buyers coming back in. So the Hang Seng 50 cash index, clearly a very strong performer, looking to retest a previous high. This is all the way up to 24,685. So from the 4-hour time frame, you can see that we have already hit the previous 2 weeks high. So after hitting this, the market pulled back, and now we should be watching closely to see if the market breaches this level again. And if it does, then we should be looking at a new high. So for the China A50 cash index, we saw the market opening with a gap, and now the market is looking to retest or close the gap. So good chance that this accelerates and gets back to the previous high, somewhere around 13,781 price action level. So I saw a request to check on pound yen. I don't know if it was just pound yen or if there's also euro yen. So for euro yen, it's a very strong bullish momentum, and now we are seeing the market pulling back downwards. So in this case, unless we have evidence of buyers coming back, then we should be looking at an idea of trading what we call a cup and a handle. So a cup and a handle is usually a continuation pattern. So in this case, if this movement back and then up forms the basis of our cup, and then this pullback here forms, let's say, the basis of our handle, then we should be looking at a potential continuation higher. But that hasn't played out yet, so it's a wait and see kind of scenario. So Euro card seems to be really strong and moving strongly higher. So also a buy similar to Euro USD. So Audi Swiss franc strongly moving further back downwards. Of course, if you go to the D1 time frame, you can see how an attempt to recover was met by sellers coming back in and pushing prices lower, and that could be a play for the day. So you say the pound yen. Don't know if I can find it instantly. So apologies, my chart is not loading as fast. I'm trying to refresh. It's really refusing to load. So as we wait for it to load, remember, today it seems like markets are on a very strong trajectory, clear trends. So don't go against the trend unless there is obvious signs. So I hope you enjoyed the session. If you don't have a trading account yet, make sure to check the links in the description below and register for that trading account and begin your trading journey. Go through the Novice to Pro course. It's available on FXPesa YouTube. Learn the basics and then build a strategy, remain disciplined, and hopefully make money for yourself. So that is it for the day. Enjoy the rest of your week. I hope to see you on the next session, which I'll be holding on Monday next week. Of course, tomorrow there will be one more session for the week presented by Prudence Maximilian from Tanzania. So I think the chart has loaded. So we are looking at pound yen. So the pound is pretty bullish, but also the yen is also bullish. So I wouldn't be looking at these as the very best asset to be trading instead of trading pound USD or USD yen. So this is not like the ultimate one. So here, from what we are looking at, is a market that was really consolidating the rising wedge, made a break, retested and continued, but now it seems like some weakness is coming right back. So in these kinds of weakness, they are quite unsure because you can see a potential secondary retest, but then that hasn't played out. So we could also be seeing buyers coming in and continuing with the push, given that this is more of a breakout to the upper side, which implies further bullish momentum. So that's it for the day, and enjoy the rest of your day.